Be Wealthy and Smart, episode 1299.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about how sentiment is tilted too much toward greed. And that, combined with a stronger dollar, which is boosting interest rates, is wreaking havoc on the markets. So while we are still in a generally bullish time of year, we've had a bit of a rocky start. The first week of January, which is an important indicator for the year, ended up down. And now markets have been rocky and have slightly negative performance for the year. This is part of consolidation of those big gains that we had at the end of the year. The market went up the most in history in that short period of time, and it's digesting all of those gains. But also, interest rates started to fall like a rock, and so some natural rebounding and retracement was normal for interest rates as well. And that came because the dollar strengthened, which pulled interest rates with it. I believe all this is temporary and nothing to worry about, but it doesn't feel good. Investors are still very bullish at 48.6%, believing that the market will go higher. And typically, when you have that high of a percentage, the market does tend to correct and get people back into a more fearful mode and out of the greed zone. So markets are going to have to drop to bring back some of that fear and keep the bull market going. After all, markets are said to climb a wall of worry. If most investors are overconfident the market's going to go up, then typically it surprises us and corrects the other way. We always keep that contrarian view. And we have the S&P slightly in positive territory, up 0.29%. The Dow is down 0.24%, and the Nasdaq is down 0.26%. So everything is either slightly positive or slightly negative. But overall, the market is really reliant on profitability. And what I'm hearing is corporations are very excited about implementing AI strategies to increase their profitability. And that will lead to higher corporate profits, which will lead to higher stock markets, at least in the first half of the year. I'm very bullish for the first half of the year. I think the second half we could have a little bit more rockiness as we head toward the election. Being in an election year means that this is the second best performing year of a 4-year cycle. So typically we do end up with positive returns in an election year, and we should have a little bit more help from the Fed and some more liquidity that will help drive markets higher. We're really data dependent still, and we're watching inflation to make sure that inflation keeps moving in the right direction. You can temporarily have a bump in the wrong direction, but as long as it keeps the declining trend intact, we'll be in good shape this year. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.